Hello, Reece from Follio. Welcome to our podcast.
Thanks for having me.
We're, mate, what a market we're in at the moment. We were just talking earlier, there's so much uncertainty. And I said to you that I just feel like I'm on Groundhog Day when I'm talking to my clients about what's happening in the future, which is it's a seller's market.
Yeah.
And that may well be the case, but there's so much uncertainty out there. I've just got a few, I'll start with the good, the bad and the ugly. The good in the market is GST cover up in WA set to increase, AUKUS down in Henderson, positive immigration and job growth. The bad is interest rates expected to rise, which in the last few weeks that's looking quite hideous. Eastern states markets are tanking. The Financial Review, yesterday's headline, auction rates crash as high rates, Iran war takes toll on buyers, and the ugly is capital gains tax. So what's your take on the market and what do you think is going to happen in the next 12 months?
Well, what a question to hit me with straight away.
Straight between the eyes,
You did say you were going to send me the questions, and I never got the questions, but you said you had to change them a few times because there's been a few changes.
The last week has been nuts.
Definitely uncertainty in the market. I guess not so much just Perth, but Australia as a whole. There's a lot of headwinds, I guess, that we've probably had in the last couple of months. So I guess as we're recording this, we've had 2 rate rises, likely going to be another one
at least
with the inflation data that we've seen.
Yep.
And then obviously the Iran war and everyone, I guess, I think every other article I'm seeing at the moment is about petrol prices at the minute as well, and that's starting to take effect, and a few other things as well. I think so construction costs are going to be going up, plumbing and whatnot. So there's going to be some uncertainty at the moment.
Absolutely.
But we're not unused to uncertainty, especially if you look at the last couple of years or even just 12 months ago. Not to the same extent as what we've got right now, but the Trump tariffs, I think that was like March, April last year.
Yeah.
We just saw the market do nothing for 6 months off the back of that.
Yeah.
So uncertainty or like sentiment in the market definitely can affect what's going on. I guess from our perspective, you've only got to look at the biggest one was COVID in the more recent history.
Yeah.
And actually, everyone always says, "Oh, I wish I could have bought at the beginning of COVID," but that was because everyone was fearful to buy at that stage. And not saying we're going to have a repeat of COVID, but
people are saying they feel like it's COVID again.
Well, this is the thing, and that uncertainty that can be the best opportunities.
Yeah.
So, looking at Perth as an example, the amount of people I've heard, friends, I'm sure you've probably had people within friends and family as well that have just been on the sidelines for 12, 18 months, missed out on multiple opportunities, whereas now it's still a seller's market, I 100% agree.
Yeah.
But there's definitely more opportunity from a buying perspective to, you've got some form of negotiation there and you're not going to be competing with as many
That is what we're saying.
Yeah.
In Northern Suburbs here, our reps are saying people are just doing nothing. They're not buying, they're not selling. Buyers' inquiries dropped away. So if you're brave, there is definitely opportunity.
100%. And like we're actually seeing, from our buyers agents team working here in Perth, for the probably until a couple of months ago, it was bloody tough. Like there's, you're trying to get the best price because we're purely looking at investors, right? So we're not going to come in like an owner occupier with an emotional attachment to overspend on a property. And we were struggling, to get opportunities or the only off markets I guess we were getting were because of the flexibility in terms an investor can have.
So has that changed now?
I think we've definitely noticed in the last couple of weeks, well, there's more bargaining power for sure. And I think, from an opportunity perspective, so I'll give an example. I know there's some couple of properties we bought on the weekend. Those similar properties would have been getting 8, and you would know this full well with your business, but they were getting like 8, 9 offers, and we were competing with one other person.
Yeah.
And we were able to get a price. We came in cheaper, but because we had the flexibility of an investor, with a longer settlement, we were able to get that across the line. But that sort of deal, say 6 weeks ago, wouldn't have been possible.
So that leads into the question about why would someone in this market use a buyer's agent?
Yep. For a variety of reasons. Like, for me, I know myself. Like, you could give me all the data in the world, and I'm too busy. Like, I would attempt to do it. I would miss something that's completely obvious in the transaction. whether that's my due diligence with the property, whether that's like negotiating power. So our ideal client as a business is time poor professionals or not even just professionals, just people that are time poor. But where else you're going to get it is the local, like you would know with your business, it's that local intel, right? So the data can tell you everything, but the sentiment is what is actually going to be the strongest indicator in that property. So that's that local knowledge that the buyer's agent has where they're dealing with, Davey real estate agents, they're dealing with some of your competitors' real estate agents. They know what houses are selling for and what's coming on the market. It's that local intel, how many offers were coming in on that versus what it was, say, 3-6 months ago. So it's that real local knowledge that would take an individual. Don't get me wrong, you could definitely get up to that point, but you'd have to focus a lot of time and energy, understand the market, literally be talking to agents for 3 to 4 months to understand that. So that's probably where we come in from our perspective.
I agree. I think I get asked the question a lot, can you find me a bargain? And the true bargain's not what you necessarily pay today. It's what you potentially sell it for in the future.
Yep.
And that's that local knowledge that you need of an area and what's going to be strong growth versus something that's going to lag behind the rest of the suburbs around it.
Yep.
So a lot of people don't have that knowledge.
Yeah, exactly. And the thing is markets and sentiment can change so quickly. So you've only got to look like if we looked at the properties we're buying in Perth now versus what we were 12 months ago versus 24 months ago, they're all completely different. So there was a period there, say 12 months ago, we were buying a lot of units.
Yeah.
They were undervalued. This is before the first homeowner cap went to, no LMI went to 850. They were severely undervalued. We were getting good blue chip areas, 3x1s, townhouse unit villas.
Yeah.
And that was a lot of our acquisition, say 12 months ago.
Yeah.
We're barely buying any at the moment because since that first homeowner cap's gone in, the ceiling's gone to 850 and beyond.
Yeah.
And we're just not really seeing the value because we're a national business. We have more affordable markets outside Perth for that. However, we're, probably an asset type we've probably always liked. And right now we probably see some really good value in.
Yeah.
Is something that there's a bit of a value add perspective on there. So you're starting to see now in the Perth market that 1.1, 1.2 to 1.5, there's a lot more better opportunities in that price bracket than there is sort of below the $1 million mark at the moment.
Yeah, that's wild. And prices are still going up. Right now there's some indecision we talked about earlier, but what do you think is going to drive our market for the next 6 to 12 months?
Yeah, so I think we were just saying off air, there's a lack of supply still.
Yeah. And
you've only got to look at the listings data. I think we've tricked above 3,000 the last couple of weeks, according to REWA. And, they were historic lows when we were below 3,000 or even on 3,000. So we've been trickling around that for the last 3 or 4 months. You'll hear a lot of agents talk about that listings data. But the big one that I always say is it's actually the sales to listings ratio. And we've been selling weekly stock over 30% for like the last 6-7 weeks. And when you sell over 30% of stock a week, it drives growth pretty rapidly. And some of the analysis we've done, it looks about 0.4% growth per week if you're selling 30% of the stock. So just give perspective to the listeners. 12 months ago, I think there was nearly double the amount of stock and we're selling the same amount of properties. So it is still a very competitive market with a lot of buyer demand there at the moment. And still, from a building supply and a building approval supply, we're still well behind where we need to be from a threshold perspective.
It's very true. It's a good point. I think people look at that listing stock available and think that there's not much coming on the market. It's coming on. It's just selling so quickly.
Correct.
Until recently. I think, we'll see a little pause for a month or so, but I think that'll change. So what's your tip for suburbs to buy in or areas for people? Someone's watching this and thinking, I'd like to invest in Perth.
Yep.
If you've got any ideas about where a good spot to start would be?
Yeah, for sure. I think we still like the northern suburbs as well. Yep. I think from a value perspective, just you've got to buy right or smart in those areas at the moment because you can overpay. Like, you look at somewhere like a Heathridge at the moment or even Craigie, for example. You can get some good deals there, but there's also some big prices getting paid, especially for ones that have been recently renovated. And that's probably where, those areas of the bigger blocks where there is maybe this potential subdivision potential, an older style property that you could maybe do a little bit of a cosmetic uplift, just to increase the rent a little bit,
Yeah.
and then obviously let the equity do the heavy lifting over a period of time before you do some severe works on it. So we really like those value add properties. There is obviously a lot of sentiment in the market around, like you mentioned earlier, around that AUKUS program in Henderson.
Yeah.
So I think when I was looking at the core logic data from 2025 summary, I think 3 of the top 5 suburbs were all around that precinct. But that's sentiment's driving it there, and it hasn't started. So it's like,
is it like gold prices? Gold prices went up because of this Iran war that was about to happen.
Yep.
Now it's happened and prices have actually come off on gold.
Yep.
Do you think Henderson's the gold of real estate?
Look, I think for us, we had a big position in Rockingham like 3 or 4 years ago for a lot of our clients. And initially the plan was probably to look to start to selling off those assets, but we've actually said don't sell because it's almost going on its second run. In terms of entering the market, it is hard to justify entering the market in some of those suburbs when they've already doubled in value in the last 4 years.
Yeah.
And that's what you really want to look at as an investor. You look at the Perth market as a whole. Its last boom sort of when it ended around 07, 08, we tripled our medium house price. Now, since on this run, we've doubled.
Yeah.
So, if you look at historical data, potentially we've got some room to go. But if I'm an investor, do I want to be entering when a property's doubled in value in the last 4 years? Probably not.
Yeah.
If you're a first-time investor and you want to get some quick capital growth, because those areas still will perform really well over the next 2 to 3 years, absolutely. But if I'm like, myself personally, I'm more of a boring medium to long-term hold, blue chip type guy. And for me, I'd rather get in more at the start of the cycle and ride that out and have a good asset that can survive multiple property cycles as well.
Good point. I was going to ask you, if you bought a house today, when would be a good time to maybe sell it or offload it? And you've answered that. I guess you talk to the clients about what their strategy is and how long they want the investment, I guess, and then plan it out from there.
Exactly. And I think for us, right, as a business, like I said to you earlier, we're a national business, but we do have a strong presence in Victoria. Like we've got an office in Richmond now. We are buying a lot in Melbourne and Geelong particularly. But even when the strategy, when we have a conversation, like when our property advisors have a conversation with a client and the strategy makes sense for that medium to long-term hold in, say, a Melbourne blue chip, sometimes they'll always still, like if they're Perth local, they're always still going to want to invest in Perth because they want to, there's probably 2 types of clients we see a lot in Perth. One is the one, they want something that's local.
They can touch and feel it, drive past.
Exactly, sense of pride. Also their kids. This is the big one we're seeing it. And I've noticed this shift in the last 6 months.
Yeah.
People are wanting to buy a property because they see how hard it is in the property market. Yeah. They want their kids living close by. They're buying in suburbs nearby with the intention that their kids are going to move in there in like 15 years' time. So that's a big one we're seeing. And we've even had to increase recruitment for like we were, doing our analysis on where we sort of saw the market and what a typical client of ours looks like and what the strategy will entail. And we're like, okay, I think the Perth market for us will probably be maybe 10, 15% of business that comes through, but we're still doing 30, 40% business in Perth because there's an additional element where someone's either going to want it local, they're not comfortable investing outside their backyard, or like I said, the big one is, they want to look after their kids. And I think, markets will move in cycles from a macro perspective, but there's always going to be micro sub-markets appearing. So, you're always going to have suburbs that outperform others, even in a stagnant market as well. And I think that's where our due diligence comes in, where we want to make sure we're getting the best investment grade assets.
Point. I'm definitely in the bag of looking for an investment for my kids. I don't want them living 40 kilometres away, and I never see them when they get older. But you just got me thinking then that Perth's great, but there is opportunity elsewhere. I wouldn't have the confidence. I'm in real estate. I wouldn't have the confidence to go over in Melbourne, buy something. But that's where you guys can come in, and it'd be a good conversation to have, I think. And do you always propose that to people, saying, I'm looking for a property in Perth? Do you say, well, how about X, Y, and Z?
Yep. Look, for us, because the way our business works is we're a buyer's agent is part of the service, but we probably more see ourselves as an investment advisory. So the first point of contact will be with a property advisor. What they'll do is go through the goals, objectives, circumstances, do some modelling and forecasting through our platform that we've created, and kind of come up, okay, what's the end goal? Is it I want to retire at 55? Is it I want that passive income? Or I want that dream house? Or I want to get the house for the kids to be in the same area?
Yeah.
And then it's just re-engineering the goal backwards, looking at data essentially. So, you know, as a business, we're always looking at the long-term fundamentals. So long-term compounding growth rates, good asset qualities. And from there, we can determine where they are on the cycle and, you know, what's the, you know, predicted amount of growth they're going to have over that hold period with that asset. Certain people, though, Perth will still make sense because Perth will outperform the rest of the country this year. Yeah, most likely next year as well.
You've just recorded that, so we'll make sure everyone sees that.
Look, the fundamentals are just too strong on Perth, and you've only got to look at the demand and supply totally wins, right? But I think the other thing you have, a lot of times in these uncertainties, Perth seems to really be a strong point from a sentiment standpoint. Only got to see if COVID, we had a complete switch in how people saw Perth as a viable place to live. I know this full well because I did 10 years in the UK. When I left to go to the UK, I was like 25. I grew up in Perth. At that time, I knew everyone in Perth, Perth was boring. You want to get out, go do something. COVID changed everyone's opinion.
It's true.
It was, and I think it's not just a mining town anymore. People are coming here for the lifestyle choice as well. And you're seeing a mass exodus of young people in Sydney. They're all going up the coast, or they're coming across here at the moment as well.
And why wouldn't you? So for our investors, you've got, obviously you work well with the mum and dad type investors, but for some of our people that are a bit more sophisticated perhaps, and they've got financial planners and accountants, do you work with that team as well?
Yeah, absolutely. Yeah, so I would probably say us as a business, our types of clients are sophisticated in some nature, whether they have multiple properties, so they're a sophisticated investor in that firm. But I think where we really stand out versus, say, a competitor or someone else in our space is we're very data-driven, and what we generally attract is, even if they're a first-time investor, someone who can understand, not necessarily understands how we've gathered all the information, but understands the core fundamentals of what makes a good property, what makes a good area to invest, what makes a good strategy, why you shouldn't be like focusing on quick growth in 3-4 months, like you see a lot of these buyers agents out there pitching. So I think naturally we attract ourselves with a bit of a sophisticated investor. But yeah, in terms of like having a property portfolio, absolutely. You know, we work closely with accountants and financial planners. And I think that's the one thing I've probably noticed in the last 12 months. Financial planners were always a tricky referral partner because it was almost like they weren't really pro-property. No, you didn't want to be giving conflicting advice. But I've noticed a serious shift. And I don't know if it's because the Perth market's done really well and we're dealing with a lot of Perth financial planners.
Words, I think.
But there's a lot that are very pro-property. And I think you know, when we are dealing with a financial planner as well, we make sure we're not pitching a completely different strategy. We're only giving property advice. We're not giving financial advice. Yeah. But naturally, that property advice is going to have a correlation with the financial advice. So with those referral partners, we'd always like be in communication and make sure we're not giving a different strategy. But I have noticed a really big shift which is great, where they are seeing a positive, there is a place for property in your portfolio. It doesn't all have to be, shares or crypto or overexposure in some of those other markets.
Absolutely. And have you got a take on these capital gains tax changes? It's quite frightening for our industry. Have you got any thoughts around that?
Yeah, so we actually had on our podcast, we had Ben Kingsley on, as we're recording it, we had him on this week. So he's the chair of the PICA Association, which is the Property Investment Council Association. And so he had on very good authority in terms of some intelligence that he's hearing in the market, that the capital gains tax will reduce from 50% down to 33%. That's what they're kind of saying at the moment, and potentially the negative gearing. Not he wasn't as confident on this, but potentially the negative gearing will be to 2 properties only.
Right.
So my thoughts on that are what he's out there doing, and he came on our podcast, he's going on a lot of different other podcasts, is to just try to educate what the changes could do to the property market. It could actually have a complete negative impact to what the government thinks is going to happen. So, it's a very good play for the Labor government to come out with, because property is one of the number one talking points in Australia and these property investors. I think the challenge will be, the big thing investors always say back is the rents are going to rise, because if you do increase this or if you do reduce the redemption on
Absolutely.
the CGT,
Yeah.
what do you think people are going to do? Hold their properties longer.
Yeah.
So they're not going to free up the stock at all.
Yeah.
I think there needs to be a reform. Absolutely. What Ben pitched was fascinating, and I tend to agree, because it could get rid of the bad apples in the industry. So what he pitched was, rather than it being 33% flat, okay, after year 1 or year 2, it's 33%. Maybe year 5, it goes to 40%. Maybe 10 years, it goes to 50%.
Right,
so what it does encourage people to do is not inflate. So I guess not flip houses or not inflate and pump up markets, because the biggest issue in, say, the property investment space at the moment is buyers agents or individuals flooding a market. Like, let's just use a regional town like Darwin, for example.
Yeah.
Seen some serious amount of growth, but it's been flooded with investment activity. And what happens with those guys is they go into a market, get 30, 40% growth, then come out of the market, and you look at the 30-year property prices in Darwin, it's like this. So
As they come and go.
Exactly.
Yeah.
So actually bringing in something like that would eliminate these people that are coming in trying to get quick capital growth, or we'll slow it down, because they're going to get a tax penalty. And then also, I guess, from the 2 property negative gearing aspect, a lot of these people that are holding 100, 150 properties, but they're all speculative assets, they're probably going to free up the supply as well.
Which not, I don't mind that. It doesn't sound too dramatic for those that have the 100 properties or so.
Exactly. And the only thing is, right, like everything, people will find a way to manipulate whatever there is. So let's just say it does get changed to 2 properties per person. I guarantee within a couple of months, there'll be some loophole where there's some sort of structure you can have where, okay, there's 2 property here. Yes, you can have 2 properties in this name, but then you can have 2 properties here. Like, there's always going to be, like, the people that are focusing on that will always find a way to
Always find a way
to manipulate.
Well, that's great, Reece. So if someone wants to find more information and wants to contact you, what's the best way for them to do that?
Yep. So if you want to find more information about what we do, we've got a podcast called the Follio Property Podcast. Check it out on YouTube or Spotify. So that's purely kind of strategy stuff, market updates. If you're interested in talking to any of the team, likewise go on to the Follio, which is double L. Just Follio.
Good tip.
Yep, Follio double L website. And we'd love to have a chat with them.
Our clients can go through Courtney and Sophie, and we'll contact you.
Correct.
Through that. So thanks for your time today. We really appreciate it.
Awesome. Cheers, Andrew. Thanks for having me.
Cheers.
Thanks, mate.